trends first in M&A for 2021. It's really interesting because for sellers now, there are more options in the bigger markets, and these things kind of trickle down to smaller markets over time, but it's definitely something for us to keep in mind as we think about taking any of the companies that we've put together and exiting. There are more exit paths now. It used to either be you sell to PE, private equity, or you do an IPO. SPACs, which are, the SPV is the special purpose vehicle. A SPAC is a special purpose acquisition company. So it's basically, I did a lot of these back in the 1990s. At the time, it was called a blank check company, which you filed an S-18 for. You basically take a company public in advance, fund it up, and it has no business. It's just basically a public shell. And so what we used to do is build those and sell them. I did a whole bunch of them. And it's a really interesting way to get your company public. It's not, it's kind of like a reverse merger, and a reverse merger is where you have a company that is a public shell from somebody that filed it sometime before, and you fold your company into that, and then you go forward and you're public, and it's faster than going through the registration process. The problem with those is that you usually have all these challenges with float, the number of shares that are out there in other hands, and short sellers and things like that. So when you take it public yourself, you're not stuck with all those problems. So the SPAC is kind of a comeback of the blank check company. And there were, I think, 180 of them that raised $65 billion in 2020, which is kind of crazy given that before that, I think it was like 4 billion. Maybe it was 12 in 2019. So these are really, really on the trend, and they're getting a lot of play from investment bankers and banks and pension funds and companies looking to invest in those. So the SPAC is kind of interesting. Not really something that you would be likely to do unless you were pretty sophisticated, but here's what's cool. The SPACs are like private equity, so they're looking for companies to fold into them. So now we have not only the thousands and thousands of private equity companies and the thousands and thousands of companies that are buyers, but we also have this new group of funds that are called SPACs. So just something for you, to kind of keep on your radar as something to kind of just keep track of what's going on with it. The other thing is that we're seeing a lot more companies that are doing joint ventures and alliances as a precursor to an M&A deal. So one of the things that I think would be really smart for you guys to think about, and I think it's always good anyway, is to really think about, with the companies that you've got, how can you partner with other people that might be potential acquirers? Because there's a lot of activity there right now. Also, more virtual deals. So this is really cool. We knew that there was a lot less travel, of course, because of the pandemic, but it was kind of a challenge going into management interviews and site inspections and things like that. But one thing that was really cool, that they did a survey of a lot of deal makers, and 55% of them said that even once things come back to normal, they are going to go much, much more towards virtual for that. Now, there's nothing like an in-person meeting, but when you're buying something that's not nearby and you don't want to travel, or particularly in the early phases of the deal, virtual deals are definitely working, not only for people like us that are doing smaller M&A deals, but for the big guys too. A lot more cross-border deals now because of the post-Trump presidency, with Biden coming in and an expectation that things will recede from the isolationism that Trump kind of had put in place internationally. There is a lot more interest in those. So if you're looking for deals to do, don't be afraid to look out of the country. I know we talked about several of the ones that we've done with companies that range from China to to Europe to South Africa, to Africa and South America. So those deals are coming back, and there's a lot more interest in them right now too. So if you are not in the United States, then that's good news for doing deals with US companies, particularly with all the capital that's here to do deals now. If you are in the United States, then it's good in that it really opens up the rest of the world a whole lot more than it has been for the last several years to doing deals that are international. The other thing is that a lot of sellers are looking at dual tracking plans right now, which is rather than picking an IPO or a sale to a public company or a sale to a SPAC, they're running those in tandem and bringing all those people in, but in separate tracks. So basically, they've got a track where they're talking to PE funds, they've got a track where they're talking to SPACs, and then they just pick the one that's best. You have to be careful when you're in the contracting phase. That's okay, but that is something that is becoming more okay because more and more people are doing it. And that's partially because of the increased competition for deals. So just some kind of macro trends in the M&A world. The other is that a lot of companies now are divesting, meaning that they're larger companies that are selling off parts of themselves, or their private equity funds that are everybody's looking at the new year, the new administration in the United States, and the expectation that the pandemic is going to end sometime in second or third quarter, and they're getting ready for that. And part of the get ready is that they're saying in acquisition deals, they're doing more carve-outs. We've been doing carve-outs forever, right? But it's coming back. So what's cool about that is that means that if you start networking with people who are doing deals that are private equity people or corporate biz dev departments or M&A departments, then you may find that you get some deal flow because there are bits of businesses that they're acquiring that they're not going to want. They're doing carve-outs there, or they're divesting. They're just basically selling off parts of businesses or entire brands that they have acquired that don't meet their plans going forward for 2021. So a lot of opportunities there. And then earnouts. I think it was Leslie and I were talking about that, how do you deal with this valuation gap between COVID bump for lots of businesses that received a significant bump because of COVID, and COVID trough for the people who got hit adversely impacted because they had local businesses or location specific, got to visit kind of businesses. So the one of the tools, and I'll talk about a couple of other creative things here in a minute, that you're seeing used a whole lot more that's a traditional tool is earnouts. So if you had sellers that were previously not really open to that, a whole lot more use and acceptance of that is coming in right now.